Good morning, everybody. It's Friday. Thank God it's Friday. So how are we all? Are we good? Are we glad it's Friday? To me, it has felt like the longest week ever. Anyway, so good morning, everybody that's joining. How are we? Morning, Andy John. Yes, sir. Oh, thank you for the badge. That's an early one in. Thank you so much. I still don't know what these do. That's what I'm going to do over the weekend. I'm going to work out what all these things actually mean. Good morning, is morning, Dell. You've joined us. Oh, so how's everybody's Friday? Good? Yeah. Okay, so. Oh, they're a bit. I'm better off without them, I think. Right, let's get into the news headlines for today. So again, it's been quite a quiet week in the press, but let's see how we get on. Yeah, still can't bloody see out of these glasses. So let's start with Property Week. Now, we haven't looked at Property Week this week, but it's a publication that has been going for some considerable time, and it's got an interesting article. This was also on the mainstream news as well, but I think it was one of those that was sort of not too busy in the headlines, obviously with the storm and everything. Everyone's been a bit busy with that. So this is Fraser founder Mike Ashley buys a 3.1% stake in build-to-rent giant Grainger. Now, I think this is hugely important. Now, I used to drink with Mike Ashley many, many years ago in a former life when I lived in North London, and we used to visit a bar restaurant in Whetstone in North London, N20, and it was called the Haven, and we used to drink in there. So I knew him socially. I didn't know him personally, and he was somebody that would do acquisitions. He acquired JD Sports and things like that. So for him to take this step to buy a 3.1% stake in Grainger, which are one of the industry's largest build to rent landlords out there, I think says a lot, because it's talking about him foreseeing the future. He obviously sees there's a lot of money in build to rent. He obviously sees that's where the industry is going. Otherwise, he wouldn't have taken a stake like that into something like Grainger. He would have done his own buy-to-let investments through his company. Now, the other interesting point about what Mike Ashley has done here is this 3.1 stake he hasn't taken out in any of his companies. This isn't a company that's bought the shares. It's him. It's a personal. That, again, I think is huge, because anybody like Mike who is in business and running businesses and acquiring businesses and building an empire, you don't do it in your personal name. You know you don't do it in your personal name. You know, we hear all those gurus out there like Samuel Leeds and everybody else, don't do it in your personal name. So there's obviously a clear strategy to this for Mike. And I think it's important. I think the build to rent market is going to thrive in the coming years, simply because the government seems to be hell-bent on getting rid of the individual private landlord. So the person that has one or two properties in their own name, they want a more corporate approach, similar to what we see across the water in Europe. I mean, I used to have a holiday let business in France, and I know holiday lets are different to mainstream rental market, but even over there, it's very rare that you had an individual landlord. You would have corporations, co-ops that would own properties, and you'd rent through them. So I thought, from this perspective, Mike taking this step towards build to rent sector was very, very interesting indeed. So let's move on to Property Reporter. Now, the headline in Property Reporter this week, which I quite liked this headline actually, and this is why now is actually a great time to be a landlord. Now, with everything doom and gloom out there, especially with the Renters' Rights Act, making tax digital and EPCs and God knows what else, I thought this was quite a nice article. So this is an opinion piece by Alison Thompson, and she is the National Lettings Managing Director for Leaders. So that's Leaders Roman. And she basically explores why, despite all the regulatory pressure and media reports of landlords exiting the industry en masse, that buy-to-let still remains profitable for the sector. So basically, she goes on to say demand is continuing to outstrip supply for many properties. And the report says for many years now, the private rented sector has been able to provide enough homes to meet demand. And that's across all tenant types, young adults wanting a room, families looking for an unfurnished long-term let. And obviously with the population growing, the private rented sector isn't. It's stayed at around 21%. It says the Office of National Statistics data basically sees that, again, it hasn't changed. 20.3% of all housing is private rented sector, with around 4.8 million dwellings in the private sector. So that hasn't really changed much year on year. It's stayed around that 20% mark. Rents are rising faster than the historic average, so return on investment is looking better. Mortgage rates are falling. I mean, right at the very beginning, at the start of this week, one of the reports that I talked about was HSBC had cut their mortgage rates for buy-to-let mortgages, and then Barclays quickly followed suit. And obviously with the Bank of England base rates down, again, that's had an influence. And again, this then goes on. So for most capital growth, it is the least keeping up with the rate of inflation. As a landlord, inflation is one of the most important metrics to track, both for rental income and capital growth, to ensure the value of the investment profits and doesn't drop. So it's good news that although average house prices have been relatively stagnant over the past 3 years, rising only 1.5% according to Land Registry, the increase we saw in the previous years are more than compensate for the slowdown. So that's positive. And then basically they just go on to give some statistics. And as much as I like statistics, I think just reading these off a screen would be quite boring for you guys, to be honest. So what's your thoughts on that? As a landlord yourself, are you looking at adding to your portfolio? Do you still think it's a viable option? Or are you looking at pulling out your cash and maybe investing in something else? I've heard a few people talking about investing in gold, because obviously gold and silver have just shot up through the roof. So let me know what you think about that. So now we're moving on to Landlord Today, and this is basically a bit of an interesting take. So the headline here is delay the Renters' Rights Act by a year. This is a plea by the Conservative Party. The Conservative politicians want the government to delay implementation of the Renters' Rights Act for a year to allow time to fix the court backlog. Now, I absolutely agree, and I think that not really putting any time and effort into the courts is going to be detrimental when the Renters' Rights Act comes in. Jonathan Hulley is a Surrey councillor, former parliamentary candidate and a social housing lawyer. He warns that the Renters' Rights Act risks becoming law which was born with good intentions but goes on to be a failure. I don't think it was born of good intentions. I think the Renters Reform Bill, which was laid by the Conservatives, had good intentions, and the Conservatives knew it wasn't ready yet, which is why it didn't go through Parliament as quickly as it could have done. And when Labour came in and Matthew Pennycook took it out of the shredder and sat there and stuck it all back together with his Pritt stick, I think he was so eager, his ego took over, and he was so eager to show, you know, look what we've done. We've got it through Parliament and the Conservatives couldn't. That was his focus more than actually, is the bill right? And even at PMQs and things like that, Kemi Badenoch has stood up, and so have other Conservative ministers, and said the bill isn't ready. It's not fit for purpose. You need to go back. But Matthew Pennycook wasn't listening. He didn't have his listening ears on, as Judge Judy says. The article goes on to say, scrapping Section 21 triggering problems. Well, no shit, Sherlock. On the Conservative homepage website, Hulley writes that the abolishment of Section 21, an eviction process he describes as being exercise on paper, which realistically is, it's rare to get a hearing with a Section 21. Each possession case will now require court time, which is correct. At the moment, Section 21 is what they call a box judgment. So basically, at the end of the judge's day, he's given a box of things. Section 21s are usually in there. He has a read through. All the paperwork's correct. He stamps it. You get your outright possession order. So it doesn't need a hearing. But now under Section 8, because of the Section 8 process, every tenant will have a hearing. Can you imagine how busy the courts are going to be? So just interesting to see how the Conservatives are now coming forward, basically saying it's just not fit for purpose. He goes on to say that many small landlords who make up a large part of the market may decide to exit the sector altogether is not wrong. The result will be fewer rental properties and higher rents for those who stay. I don't know if there'll be fewer rental properties. I mean, what we're seeing is those properties being purchased by other investors who are adding to their portfolio. We're seeing a rise in the selling with tenant in situ. So I don't know if we will see those properties removed from the private rented sector per se, but I certainly think we'll see rents increase because ultimately there are going to be additional costs for landlords in this. Insurance products are going to go up. They're going to have to. The cost of guarantors, guarantor companies, that's an added cost for landlord. You're going to have things such as the redress scheme and the database. They're going to have costs. We don't know what those costs are, but even if it's £10, even if it's £20, those are additional costs for landlords. And I think the Conservatives are right. I think delaying the Act implementation would have been a smart idea, but I doubt that they'll backtrack on that now. So moving on to property industry A. I don't know why it makes me say that. It just makes me think of Ali G. I'm showing my age now. So this goes on from what I just said earlier about HSBC cutting their mortgage rates. Now, they were the first ones of 2026 to announce that they were cutting their rates. And Barclays have now come forward. So Barclays has become the latest lender to reduce mortgage rates as the competition in the UK housing market intensifies. The cuts bring borrowing costs down. Pardon me. Oh, excuse me. Bring the cuts down to the lowest level since 2022, offering potential relief to home buyers and remortgage customers alike. Mortgage rates are falling rapidly following last month's Bank of England base rate cut from 4% to 3.75%, the sixth reduction since August 2024. As I said earlier, HSBC led the move, and Aaron Strutt, Communications Director at mortgage broker Trinity Financial, added, all these price cuts so early in the year are good news for borrowers, especially those keen to get onto the property ladder or remortgage. I think it's good because if people want to buy, then these rates might be easier. But unless the mortgage companies are going to change their criteria of getting the mortgage in the first place, the rates aren't really going to make much difference to that. You're still going to need hefty deposits. Are people able to actually save up for that deposit? You're still going to have a almost exemplary credit history. How many people have really got that now? So the rates, I think, are a bit of a red herring. They're a bit superficial. They're great for remortgaging, absolutely, 100%. But I think for first-time buyers getting on the ladder, these rate cuts are kind of irrelevant if you're still not actually meeting the criteria to get the mortgage in the first place. Now, this was quite an interesting article that I read in LandlordLaw Blog. So this is a website that is put together solely by housing solicitor Tessa Shepperson. And some of the articles that she has on here are really, really good, quite detailed. And this is something that I actually read about and then put it in the back of my mind and then completely forgot about. More headaches for landlords coming in 2026. So the government's new simpler recycling reforms come into force from March this year. So only 3 months away. And landlords should start planning now because these changes will directly affect landlords. It will mean that each local authority will need to consistently give core waste recycling services of general waste, food waste, paper and cardboard and other dry recyclings. This will affect HMOs more, so HMOs could be worst affected as their strict licensing rules mean that landlords must provide the correct bins. In significant storage locations, the and ensure that the tenants know exactly what recycling and what goes into what bin, otherwise there's a fine. This could mean that landlords could be forced down the route of private waste collections under the new rules, which will put basically normal household collections to a limit. Otherwise the council waste collection services just won't happen. So I just thought it was interesting that this is yet another thing we've got to think about. It's added to the problem. The advice basically being given is work with your agent or tenants now ahead of the regulations to get all the information you need across to them. Look into current waste capacity and estimate what will increase. Ensure that the council frequency will be sufficient for your property, and ensure you have the correct recycling bin for the waste items required. Now, that's a lot, again, on top of everything else that landlords need to be looking at. And I just think, is there anything else? We're already border control. We're already doing the Home Office's job. You know, we're already checking our tenants' right to rent and everything else. Now we're doing waste management. I mean, yeah, are we working for the government now? Aren't we? It's what it feels like. So I thought that was just an interesting sort of piece to consider. Come March, we're now in charge of waste management as well. So that's the news headlines for today. Whipped through those quite quickly, actually, for today. If anybody's got any questions, I would be more than happy to answer them, as we've still got some time left. I'm just going to scoot through the comments, see if I missed anything. Okay, question, Kamal. Is it worth me transferring to a limited company, my 18 flats, unencumbered, no loans, partnership? I'm not a financial advisor, nor am I a mortgage advisor, so I couldn't advise you on that. Transferring to a limited company, you have to consider the fact that there will be capital gains tax. You have to consider the implications of that from you in your personal circumstances, and everyone's personal circumstances are different. The headlines will tell you transfer into a limited company gets you outside of section 24, and there is definitely some benefits to it, but you need to make sure what you're gaining isn't offset by what you're going to lose. So I think it's one of those, you need to get advice from a financial advisor, speak to mortgage advisors as well to see if there's anything that can be done. Maybe the limited company could buy your property through a mortgage or something. I don't know. It's not my area of expertise. So you'd need to get proper legal advice, financial advice on that. Random question. How ticklish am I on a scale of 1 to 10? I'm not, actually. I have no soul, so I am not ticklish. Oh, Benetron1, thank you so much for your comment. Honestly, mate, you're doing my head in. Shut it, Specs. Oh, that's cute. That's nice for a Friday morning. Thank you so much for taking the time to actually come on and listen to my live and then make such a derogatory comment. I mean, I hope I brightened up your day. So thank you so much. I'm not sure if you're aware, there's actually a delete button. So you could just remove yourself from my live if you're not interested in what I've got to say. But thank you for your comment. I really appreciate it because it does wonders for my algorithm. So really appreciate that. Thank you so much. So Andy John 758. Big landlords, not all that good. Someone needs to sort Ocasa housing. Shocking landlord. I think that's the bigger issue, though, isn't it? The larger corporation landlords are running a business at the end of the day, and unfortunately the tenants are nothing more than a commodity to that business. They are a number on a spreadsheet. There is no empathy, there is no sympathy. Yes, there's a customer service level, but it's much more on a corporate level than it is on a personal level. You know, when you've got a private landlord who's only got maybe 2 or 3 tenants, there's much more of a personal relationship there. I knew a landlord who sent his tenants a birthday card and a Christmas card every year. I'm sure you're not going to get that from the larger housing corporations. But yeah, unfortunately, that is the double-edged sword, isn't it? You know, it's great. They've got more money to invest in the properties. I'm sure the properties are in better condition, let's say. But when it comes down to actually the personal level and the customer service, then yeah, absolutely, it's detrimental. Any more questions or any more statements, should I say? No, looks like we're done. Oh, no. All these people that want to join and be my co-host. No, it's my show. Go away. You can't join. You can't be my co-host. Okay, so I think... Oh, no, hang on. Questions. So we are NP. We are currently supporting a tenant who is in hospital with TB. Oh, my goodness. He has been with us for 4 years. That's horrible. But good for you that you're supporting him. I mean, that must be awful. Hopefully they're getting benefits and everything that they need to be able to sustain the tenancy while they're in hospital. How will rent guarantee insurers work? They need minimum 6 months tenancy to consider insurance. They do at the moment, but come the 1st of May, the Renters' Rights Act clearly states that any restrictive clauses in things like mortgage agreements, insurance policies that require a minimum term tenancy will be void and unenforceable. Now, I've spoken to quite a few insurance providers such as HomeLet and things like that, and they're already basically got new products behind the scenes. They've already updated their terms and conditions to accommodate the new requirements under the Renters' Rights Act. So that won't make any difference. It won't stop you getting products. In fact, I think there'll probably be more products available because the industry has had to sit down and basically model it around this new legislation. So those restrictions won't be a problem at all. So any more questions? If not, I will all let you get on with your Friday, and I will see you back here at 9 AM on Monday morning.